afternoon. I'm Matthew, and I head up the equity capital markets team here for HSBC Global Banking and Markets. I think for today, I just wanted to take you through currently the listed hospitality trusts in Asia, and also the two recent IPOs that HSBC has executed in the past 3 months, namely the Far East Hospitality Trust and also the Ascendas Hospitality Trust. I think first of all, I just wanted to quickly give a quick run through of how the Singapore REITs have actually performed this year. I think the key thing is that you have seen that the REITs have outperformed the Singapore Straits Times Index and also the Hang Seng Index for this year. I think the key rationale for that is the continuous search by investors for yield in the low interest rate environment, as we see in the fixed income products. A lot of investors have moved their allocation from the bonds to hybrid products such as a REIT product in the continuous search for a yield pickup. And that is also reflected in the recent issuances in the perpetual bond market in Singapore. I think the key thing here is that IPO volumes have dropped in Asia in the past 3 years. However, the key point to note is that within the REIT sector, we have seen two of the largest transactions in Singapore being dominated by the REIT IPO. This is in line again with the not just the search for yield, but also the Singapore dollar denomination appreciation, as we see a lot of funds flow from the European investors and also from the US investors coming into Asia. In the pipeline, we also do see a couple more IPOs in Singapore, mainly dominated in the trust sector. The upcoming one will be the health trust set up by Religare, and also the airline trust, which is set up by Investec. I think just a quick overview of the 4 currently listed hospitality trusts in Singapore. As you go across the board, you will see that there's Far East, CDL, Ascendas, and Ascott. In terms of the yield that each trust is providing at the moment, Far East is currently trading at about approximately 5.8% yield on an O12 basis. As you move across the spectrum, CDL, which is currently trading at a 5.9%, and Ascendas currently trading at approximately 8%, and Ascott, which is currently trading about close to a 6% handle. The reason is, I think, first of all, the yield, the calculation of yield is basically based off the risk spread over the risk-free rate. So for Far East, which is 100% dominated, Singapore-dominated trust, the risk-free rate is obviously based off the Singapore 10-year Treasury, which is trading at approximately 1.3%. So you can see the spread pickup there is approximately 4.2% pickup. And the reason why Ascendas is trading at a currently higher yield of approximately 8% is because of the spread of the portfolio, which is across Asia, across Australia, Japan, and China. So obviously the risk-free rate used by the investors is approximately 3%. So the yield pickup, you'll see it's approximately 5% spread. That's one data point that I wanted to highlight, that the main yield comparison, it's the investors look at, it's basically the spread over risk-free rate. The second point that I wanted to highlight is also the trading liquidity for the hospitality trust. The key point that investors will look at is also liquidity of the stock. Given that for REIT products, the liquidity tends to be lower than normal stocks, given it's a quarterly distribution. So most of the institutional investors will wait per quarter for the distribution payout before they start actively trading the stock. But the key point that investors will look out for is obviously the liquidity. What they look for is between $5 million to $10 million a day in trading activity. As we go down the structures of the hospitality trust in Singapore, you notice that 3 out of 4 of them has a REIT plus business trust stapled together, so they're named as a stapled security. The main reason for the stapling of the security is basically down to the MAS regulation, whereby for CDL and Far East Hospitality Trust, the business trust is essentially a dormant trust where it doesn't hold any properties at all. It acts as a master lessee of last resort. For Ascendas, it is also a stapled security, but the business trust, part of it holds the hotels which has no master leases, and the REIT side holds the hotels which has the master leases on the asset. But as you can see across the 4 hospitality trusts, they all have master leases, and this is a key point for investors as they look towards at least a guaranteed cash flow across the hospitality sector. So they want a fixed component of the gross operating revenue. At the same time, there is also the variable rent component, which is part of the gross operating profit. In terms of the trust, growth is important. So the two ways that investors will look to hospitality trust to grow is, number one is through acquisitions. So Far East is, obviously has a pipeline and provided a right of first refusal to the trust in acquiring the potential assets from the parent. CDL has a parent, currently does not have a pipeline, but they have gone outside of Singapore to acquire in Australia. Ascendas, basically it's an independent trust which can acquire from any vendor. And Ascott has a parent from the Ascott group, which has provided the service residence pipeline for acquisition. I think that another key point is gearing. All the trusts has approximately 30% gearing, across the 4 trusts. And in terms of rating, the Ascendas, Ascott, and Ascott and the CDL has gotten a BBB rating. This is so that they can also gear up to 65% if needed by the Singapore MAS regulations. I think just to take you through, I think the first case study is the Far East Hospitality Trust. So this raised $718 million on the Singapore Exchange. In terms of where the IPO was priced, it was priced at 6% yield on an O12 basis, and on a forward basis on O13, it was priced at 6.3%. This was actually priced at the top of the price range of between 86 to 93 cents. Far East itself has 7 hotels and 4 service apartments, all located across Singapore. So this is actually the first Singapore and only Singapore-focused hospitality trust at the moment. So this is a proxy for a lot of institutional investors into the Singapore hospitality sector. So the success of the IPO has been reflected by this cornerstone tranche, where it has actually attracted the likes of AIA, GF Asset Management, NTUC Income, these were, and also Manulife and APG Investments. The IPO was actually more than 30 times oversubscribed, given the participation from more than 200 investors across Asia and Europe. The spread of the investors actually, it's from Asia came 81% and from Europe approximately 17%. You notice that there is very little US investors is because all the Singapore REITs are not offered to US investors during the IPO. This is because of the PFIC issue. So when we market IPOs, Singapore REIT IPOs, we only access the Asian and European markets. In terms of the structure of the trust, you'll note that the operator for Far East is actually Jalco. This is actually a 100% owned subsidiary of the Far East Group. In terms of the asset portfolio valuation at IPO, it was 2.14 billion Sing dollars. As I mentioned earlier, the business trust component of it is a dormant structure and only acts as a master lessee of last resort. So they'll step in if the master lessee falls away. In terms of the distribution, Far East has committed to pay 100% distribution payout until 31st December 2013. What the investors liked about it was obviously 3 main points. The first point is the right place. So as I mentioned earlier, this is the first and only Singapore-focused hospitality trust. It is also the largest diversified portfolio in Singapore by asset value. And what investors have given the feedback is basically this is a very balanced and resilient portfolio with exposure to the mid-tier hotels in Singapore. So all the hotels in the Far East Group is around a 4-star hotel range. In terms of right timing, obviously, I think, as I'll go into the next slide, is the positive view on the Singapore hospitality sector at the moment, as Singapore is now gaining a reputation for being a global MICE destination, and also the rise of the integrated resorts, and also the Youth Olympics and the proposed Terminal 4 in the pipeline. In terms of the sponsor, Far East is the largest real estate developer in Singapore, and the key point here is the downside protection through the master lease structure. So even if SARS do hit the hotels again, on a 0% occupancy rate, it still provides a 3% yield. So that really attracted a lot of the insurance companies which are looking for a guaranteed cash flow structure. As I mentioned earlier, one of the key likes from the investors is the transformation of Singapore tourism landscape. One key point that they brought up was the rise of the budget travelers in Singapore. Given that most of the budget travelers will choose the mid-tier hotels, and what they've been doing is they've been buying the ticket online through the budget airlines, and then they would then book their own hotels online. So the separation of the tour packages has risen in the past 2 years. This actually plays into the hands of the 3 to 4 star hotels, as the margins with regards to Far East, the margins for the travelers is actually higher than the tour packages. In terms of the forecast from the investors, what they're seeing is there is going to be a CAGR of at least 6.6% growth in visitor arrivals for Singapore. However, the new supply of rooms in Singapore is only growing at approximately 4.6%. So therefore, you can see that there is going to be continued demand for the mid-tier hotel range. As I mentioned earlier, for the Far East group, there is actually 3 branding. There's the Oasia, there's the Quincy, and basically there's also the Village Group hotels. Couple of the key assets that investors like was, number one, was the Quincy Hotel. Given that this is a boutique hotel, which it is a mid-tier hotel, but if you look at the website of a lot of tour agencies, it's considered upscale. So it is kind of all-in-one package where you pay one price and you get your meals, you get your transport. And at the same time, it's also located just behind the Goodwood Park Hotel, so located in the heart of Orchard Road. The next one is Oasia Hotel. This is basically a play on medical tourism, given the location is within the Novena area, where it's now slated to be the next medical hub for Singapore. The third one is Orchard Parade, which the investors like is because there's also a retail and commercial component to the asset itself, given there's shops and offices within the complex. The 4 service residences which the investors like, the key one was actually Hougang. Given that there's actually not many service residences within the suburbs of Singapore, so for the Hougang Village residences, it actually serves a lot of the kind of industries where the light goods, they put their employees, they'll staff them there, and the margins are actually one of the higher ones. I think the key point is that this is a spin-off of all of the Far East hotels. So they have committed to grow the hotel assets. You can see that they continue to bid for land, and they are the largest real estate developer in Singapore, and they have actually the #1 market share in the mid-tier hotels in Singapore. As I mentioned earlier, growth is key for any trust. So there's 3 ways to grow the trust. The first is the organic growth, whereby Far East has a strong track record, and investors have noted that the track record in improving the rooms and growing the RevPAR on consistently over the past 5 years. The second point is also the active asset enhancement, and what the key attraction of Far East is because the sponsor is actually committed to pay 50%, at least 50% of the improvements in the rooms in the next 2 years, and then the rest will be borne by the trust. So there is a shared expense by both the sponsor and the trust. And lastly, as I mentioned, the pipeline is key. Far East is what investors liked about it is the only trust right now with a identified pipeline of more, which will able to grow the trust by more than 50%. In the next slide, as I show you here, this is the ROFR that they provided. So the trust has actually a right of first refusal in buying of all of Far East hospitality assets. So the key jewel here is in the pipeline is Orchard Park Suites. This is the one which is located behind Wisma. The reason why it is not in the trust at the moment is because there is going to be a refurbishment going on in the rooms before they inject it into the trust, and it didn't want the trust to incur the expense. Going forward also, there's new hotel developments by Far East, they will also inject into the trust the moment it matures, and there is a stable cash flow. And as I mentioned, it has the potential to grow up to 50%, and I think what investors liked about it is that it is actually, they mentioned that it is very tough to find hotel assets in Singapore to be injected into the trust. As we can see, CDL has actually gone overseas outside of Singapore into Australia, whereby right now approximately 18% of the portfolio is in Australia and the rest in Singapore. So the key selling point here is that the pipeline that is provided by the Far East Group. As I mentioned earlier, the downside protection from the master lease structures have attracted a lot of insurance companies across the board, from AIA to Manulife. As I mentioned earlier, even if the trust runs on a 0% occupancy rate, there is at least a 3% yield, which is still a pickup over the 1.3% that they get if they invest into a 10-year bond. The lease structure is very attractive from what investors are seeing, is because 33% of the gross operating revenues will be part of the master lease, and the rest, the upside, will come from the gross operating profit. I think just quickly, I just want to take you through the second trust that we did. This is a different story to Far East. This is the Ascendas Hospitality Trust. Essentially, it is a proxy into the Asian hospitality sector. So it's not Singapore focused, but this is across Asia, across China, Japan, and Australia. So when we executed a transaction, we raised 513 million for Ascendas. Essentially, this is a marriage between one of the top-tier fund management houses, Ascendas, with one of the world-class hotel operators, Accor. So what investors liked about it at the time of IPO is basically this is a proxy for them to play on the Asian hospitality sector. As I mentioned earlier, we've only offered it to Asian and European investors, but the bulk of 93% of it actually came from Singapore and Hong Kong investors. I think the key thing here, as I mentioned, is the structure whereby this is the only hospitality trust on a staple security where the business trust actually holds the assets which are not on master leases, and then the REIT holds the assets which is on the master leases. So it's slightly different from Far East, where all the assets are on master leases. As I mentioned earlier, across the portfolio for Ascendas, they hold hotels in Beijing, Tokyo, and across Australia. In China, there's the Ibis Beijing and the Novotel, and in Japan is the Ariake, located in Tokyo. What investors liked about it, firstly, it is the first Pan-Asian hospitality trust. Secondly, it is also an independent hospitality trust, given that Ascendas can acquire assets from any vendors. Obviously, it has to be yield accretive in order for them to make the acquisition. There is also the fact that it has strong growth potential in the key markets, and also the potential revenue upside from the hotels under management contracts. And as I mentioned earlier, it has partnered up with one of the top-tier hotel operators, Accor, in order to work the assets to get the maximum yield. As I mentioned earlier, Ascendas, it's one of the largest fund management group in Singapore. They have other listed vehicles as well, including the Ascendas India Trust and the Ascendas Industrial Trust, A-REIT. So I think just to summarize on the Ascendas Trust, what the investors are looking for is obviously also Accor has provided a right of first refusal to its asset and commitment to grow together with Ascendas to grow the trust for the next 5 years.